I think the Bank of International Settlements, looking forward, is the diversion from what the Fed seems to see. Ultimately, I think they ultimately expect that after Basel III. So if we restored, I'm just looking, and I'm not saying this is going to happen, guys, but if we restored 20 to 40% ratio of gold to foreign debts outstanding, that puts gold at about $6,000 to $12,000. I mean, and in 1981, that went up to 140% collateralized by gold. So, I mean, talking 40 grand. And I'm not saying that those are realistic numbers, but it has to be put into context with why is the Fed so out of touch?
Gold used to be super important for money, but not as much anymore. The IMF has a lot of gold, but they can't do certain things with it like they used to because of a rule made in 1978. Andrew Maguire, independent London metals trader and analyst, emphasizes that linking gold reserves to foreign debts would make gold more valuable. This is because gold would become a more attractive asset for investors, as it would be seen as a more stable store of value. Maguire states that the current ratio of gold to foreign debts, like US Treasuries, is much lower than it used to be historically. The Bretton Woods Agreement established that the US dollar was the dominant reserve currency and that the dollar was convertible to gold at the fixed rate of $35 per ounce. In 1971, President Nixon stopped the convertibility of the US dollar to gold. The end of the Bretton Woods system led to a decrease in the amount of gold held as a ratio to foreign debts. 3 U.S. financial agencies announced a plan to replace the current rules that big banks follow to manage their money and risks. The new plan is designed to match the global rules set by the Basel Committee on Banking Supervision. Maguire highlights that gold trading rules are evolving, with more physical gold backing required. The U.S. is not fully following these rules yet, but the upcoming Fed meeting could change that. This could have a major impact on gold prices and the global economy. We will now share clips of Andrew Maguire from his recent video, but before getting into the video, make sure to subscribe our channel and give this video a thumbs up.
Sovereign bonds, sovereign treasuries are not, as many people I talk to feel that it's a first-year asset class. But as of the 1st of January of this year, Basel III NSFR standards came in, where over-the-counter foreign exchange gold, i.e. gold that is traded against the dollar, the euro, etc., held in that lands in London, has to be one-to-one physically backed by bullion. Now, interestingly, we're finding a lot, and we have connections with a lot of large clients, first-year banks, etc., who are saying that, yeah, you know what, we're actually seeing some diversity into, whereas with NSFR Basel III NSFR standards in place for gold, it is also become a first-year asset class. Now, if you're dealing in physical gold, that has zero counterparty risk, absolutely zero counterparty risk, because all the energy that went into making it is already paid for. Because I think we see this pivot point, so many things coming together at this point. So the very fact is that when the Bank of International Settlements, who traditionally has had swapped 700 tons of gold, in fact, in the last year, as just before, by November of 2022, they covered all 500 tons of swaps, got rid of all their paper gold exposure, and literally, and that really reflects what we're seeing at other central banks, and what you've just outlined as well, is plenty of other central banks are saying, you know what, we need a hedge here. We need a bit weaponization of the dollar. Anything could happen. It's happened to us once before. Once bitten, twice shy. So it's evolved. But what's interesting to me, because obviously it's so close to gold all the time, what's interesting, while this is happening, while this is going on, then you look at the current ratio of gold to foreign debts outstanding, US Treasuries. It's under, in fact, it used to be 6%. I think it's closer to 4%. But even accepting this unadjusted level, 6% level, the ratio used to be 20 to 40% as a historical average. And I think when we look at the US, and I think specifically Bank of International Settlements, most other central banks now, interestingly, have reversed out of the over 50 something years that when Nixon took gold off the convertibility to dollars to gold convertibility, the COMEX was formed 2 years later. And one of the many things about it was you can create a lot of liquidity. It's paper market liquidity. And I think what's interesting here is when you almost limitless amounts of paper market liquidity. And so what's interesting here to me is now that that Basel III NSFR standards have been imposed on the rest of the globe outside of what's going on in the US, which is non-compliant at this point. What we're seeing is an inflection point I believe is an opportunity point, because notably tomorrow, and I'm sure you know, the Fed has an open meeting to discuss the final implementation of Basel III International Regulatory Framework on the US. And I think it finally brings the United States into compliance with obviously any bank that's got 100 billion or more of total assets, which includes all the Fed banks, agent banks. I mean, essentially, what that does is start to bring potentially, because if you're going to do that, you're going to also have to be compliant for gold and all other asset classes. Now, I'm not saying that would happen overnight, but it's interesting that this is all seems to be happening at once.
Last year, the Chinese currency, yuan, made up only 2.7% of all the money that countries hold as a backup. The American dollar's share of this backup money has gone down a bit in recent years, but it's still the biggest chunk, making up almost 60% of the total. The ruble dropped against the United States dollar in trading Friday in Moscow to its lowest level since the first month of the war in Ukraine. Maguire highlights that a group of countries are considering creating a new currency backed by gold or commodities. This could help them trade more easily and reliably. Existing currencies like the yuan and ruble have some limitations. China's central bank extended its gold buying spree into an 8th consecutive month, adding 23 tons in June. Now, the People's Bank of China holds 2,330 tons of gold in its reserves, according to official data cited by Bloomberg. Russia gold reserves was reported at $142.915 billion in June 2023. Maguire mentions that many countries are buying gold, but they don't always tell us how much they have. And this can affect how they trade. Let's get back to the Maguire's interview.
It's already been, Reuters have already come out and said it's not going to happen. But we have over 40 nations that have expressed an interest in joining the BRICS Plus trading bloc next month at the August summit. I mean, obviously, there's been a lot of pushback about that. Oh, no, they're not going to discuss a global currency. Well, hang on. That's not what our contacts are saying in Russia. And so it's interesting because obviously Reuters is also a mouthpiece for the US government. I mean, clearly, I mean, they're not going to, they're going to try and play this down. But what's interesting is that and I'm not saying this is for sure, a gold back or partly gold back commodity currency for trade between these nations, it would actually be the glue that would bind this trading bloc together, and it cannot be ignored. And I think obviously, you know, the yuan, the ruble, it's not liquid enough to ultimately, and these have capital controls. I've heard you talking about this. They're not liquid enough to ultimately replace trillions of dollars of energy and commodity trade between these nations. But ultimately, there is really only one solution. It would be an alternative partly gold-backed commodity currency. So on the other hand, we've got global central banks openly and off the radar. Monetary gold does not have to be disclosed when you buy it. And we strongly feel that China's reserves and Russian reserves, physical gold reserves, are a hell of a lot larger than disclosed. And I think we see other central banks also accruing gold. Now, I think, yes, and I think as these things evolve and as these ideas start to take hold, I think at the margin, it doesn't take much at the margin to alter the dynamics. And I think, yes, of course, do you think China wants to destroy the dollar? Of course not.
No.
I mean, it would shoot themselves in the foot. So, but over time, once you implement these things and there is a you can come to some sort of agreement where you can use a stable currency which is used outside the dollar for trading amongst yourselves. But you're bartering, if you were to call it bartering, using something you can trust. This is a process, so it's interesting times, I think, as well.
The upcoming Fed meeting could be a major turning point for the gold market. If the Fed decides to adopt the new rules on gold trading, it could have a significant impact on gold prices and the global economy. It is important to stay tuned to this developing story to see how it unfolds. What do you think? Is gold the new currency of the future? Let us know in the comments below. That's all from us. If you like this video, please like, share, and subscribe to our channel and click the bell icon to be notified when we release new videos. Currently, 95% of our viewers have not subscribed to our channel. Our goal is to reach 2,000 subscribers. Please consider subscribing to our channel and helping us reach our target.